labor market added fewer jobs than expected in July, while the unemployment rate moved higher. And revisions to prior months' numbers revealed significantly fewer jobs had been added than initially thought. The US economy added 73,000 non farm payrolls in July, less than the 104,000 expected by economists. The unemployment rate moved up to 4.2% from 4.1% the month prior. In line with economics expectations, I don't think that's necessarily true though, because if you take this out, there's a reason why you don't take these things out to 2, 3 decimals because of the margin of error and all that stuff. But um, this was very close to 4.3. Just as a asterisk on this 4.2, I think it rolled out to 4.248%. So just like, and that happened despite a drop in labor participation rate. If the labor, we're going to talk in a little bit, but if the labor participation rate hadn't dropped, especially in recent months, this number would be much higher, as you're going to see in about 5-10 minutes. In its release, the BLS said downward revisions to the May and June jobs reports were larger than normal, with those changes showing more than 250,000 fewer jobs were added to the economy over those months. May's job gains were revised down to 19,000 from 144,000, while June's additions were cut to just 14,000 from 147,000 initially reported. By the way, it should be noted that in May, June, July, the stock markets surged. I mean, they had a V-shaped recovery. And despite that, job additions were anemic. I mean, this is lower than stall speed, actually. The July jobs report was much weaker than expected and raises the odds of a Fed rate cut in September. Oxford Economics lead economist Nancy Van Houten wrote in a note to clients. The increase in non-farm payrolls in July was softer than anticipated, but the real story was the revisions that wiped out nearly all job gains in May and June.